What's going on, y'all? What's going on? What's going on? What's going on? So, today's the 21st of June, 2025, and I'm gonna take you through my gold, gold week, gold recap, going through the moves. Gold was acting a little funny this week. But I mean, we had interest rates released. The FOMC left interest rates unchanged, and we had um, the FOMC press conference, and we also had a holiday in the US. We also had a holiday in South Africa, 16 June, and Juneteenth in the USA. So yeah, let's jump into it. Let's jump into it. So basically, as we can see from the daily chart, or even if we start off from the weekly chart, we can basically see it in one go, quick. Um, and there it is. So bearish week, and the week before that was bullish, and the range was maintained. The previous week's range was maintained. For 3,446. The high, weekly high, and the weekly low was 3,292. 3,292. So that gave a range of about, let's say, about $200 or just under that, about $200, um, which accounts to about 2,000 pips on gold. And we can see that price stayed within that range. And actually, let me just have a sip of ooh, some coffee. Mm-mm-mm. But yeah, um, quick snapshot, bearish week. Cool. And if we go into the daily, we can see those bearish candles forming out. Bearish day on Monday. Tuesday was a doji. Wednesday, we had a bearish day. And then Thursday, Friday, dojis, dojis. So not a lot of volume in this week, especially on Tuesday and on Thursday and Friday. And what we can see here from the daily chart, just basing it off of the candles that are on screen right now, is we can see if we go left to right, we're at this level here in red. We can call it 3,205. Let's call it 3,003. No, 3,205. We had that level there. And this level has pretty much maintained the whole entire time. Maybe get it a little bit bigger. 3,205 level was hit over here, and then this level maintained. So this level was hit over there, and then it was tested again here. This candle, this one didn't quite touch it. Tested again by this candle, tested again by this candle, tested again by this candle, tested, tested. So a total of 1, 2, 3, 4, 5, 6, about 7 days of this level of 3,205 being tested again and again, but it never, ever, ever, ever broke. And then price started to move up from here. It came up and then created that next higher low point. So we had a higher low right here. This is just a quick snapshot from what happened from May to June, and then we came up, made a higher high, came down, made a higher low, and then made a higher high. So continuing that pattern, we are anticipating that next higher low to be forming, already developing in structure, and going for that next higher high, potentially to this 3,500 level, and possibly breaking beyond to this negative 27% Fibonacci retracement. Moving averages are below price, signifying that price is bullish on the daily chart. And now that we have that in mind, we're understanding the whole bigger picture. So that means when we get more into the lower time frames in more detail, we're not being swayed by the candles and what's going on over there. So H4, we can see a whole lot more detail. And just breaking it down this week, we pretty much had all of this, um, all of this price came down, and pretty much came down and hit 38.2. This 38.2 level is a strong level, and as we can see, price range here for quite a bit this whole entire time. Um, price ranged, showing that this level was being tested for days and days. Actually hours and hours. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 13 H4 candle. And that equates to, let me quickly get my calculator here. 13 times 4, let's do quick max math, 26, 52. So 52 hours, so about 2 days. Let's see, 13 times 4, 52. Cool. Price tested this level and created this range for 2 whole days. Just chilling on this level, not going anywhere. And this is those dojis that we saw on the daily time frame. And I actually got caught up in this range a bit. Um, I bought and lost about $10. $10 move. So 100 pips on gold. And then I entered again all the way down here from this liquidity sweep. As we go into the lower time frames, I'll take you through that detail. And on that trade, it pumped up to about 200, 200 pips, 240 pips. And that's when I jammed stop to break even. This was before um this was before the interest rate decision on earlier this week. So pretty much from there, entered and I pretty much held throughout the whole entire time. And when the news came out, it took me out. So I had locked in. I had locked in break even and risked 100 pips. I was going for the push. And yeah, set my stop loss to break even and I just let the market do its thing. Unfortunately, that push didn't come. It started to move south, created lower highs this whole entire time on the lower time frame. We'll get into that. And as we can see here, now we're testing the 61.8 level. And this is where I have my second position. So that second position is already up to our um stop losses at break even. And I'm going for the next higher high on the lower time frame. I mean on the higher time frame. As we can see here, the projection is up here, and on lower time frames, what I'm doing this coming week is adding and adding at higher low points. Now, when it comes to adding at higher low points, it'll all be based off of structure and same criteria as the initial trade. And I actually have a trade quality assessment that I conduct before every single trade. You might have seen it earlier. Making sure we keep this as objective as possible. And here it is. Just a quick walkthrough. We won't get spend too much time here. Trade quality assessment, probability filtering, making sure we get those high probability setups. And I use this before entering any setup. So whether it's a limit order, stop, or market execution. So I want to know my entry, SLTPRR, and what volume will I be putting on the setup. The volume, we can actually put that once we have our score on this on the setup. And the first one, does this trade setup is it happening during high volume sessions like New York session? So my main trading times are New York session. So that will be 1 p.m. to 10 p.m. South African time. These are the times that I'm putting orders on and letting the market do its thing, right? If I get executed outside those hours, but that's fine as long as I did the work and the prep during this time, and then maybe my limit gets filled in during Asia. That's also fine. Because I've accounted for liquidity sweeps, I've accounted for the pain points, how far can price go? And the next one that I want to be a yes is my higher time frame. My H4 and my H1, are they talking the same language? Is my H4 making higher highs and higher lows? Is my H1 making higher lows and higher highs? We want that to be a yes. Our moving averages, if we're looking at buys, we want price to be above those moving averages on the daily and on the H1 chart. This just gives us that nice, powerful alignment on both charts. And the entry needs to be based off of a key level. It can't just be at random places. We want value, we want high probability, and we're not just going to be taking trades all over the place. It needs to be reacting from a key level. Key level. That could be a Fibonacci retracement level like your 38.2, your 61.8, your 78.6, 88.6, your 100% retracement. That could be your support and resistance, your indecision levels. That could be your psychological levels, like your flat numbers, round numbers, 3,000, 4,000, 5,000, or 3,100, 3,200, those round numbers. Um, and key levels, price needs to be reacting off of a key level. Otherwise, what are we doing, right? Has there been a liquidity sweep? This one is major. This one is major because this one can mess with you hard. Even when you're right, even when you've done your analysis correctly, and then what happens is, um, you do your work, you do your setup, you do everything, and then market pushes price exactly to where your stop loss is, maybe even a little further, to take out some other people as well, because liquidity is a thing. And then it goes your direction. It just goes your direction because that's what the prevailing trend is. However, there was some fuckery that did happen, and you're no longer in the position, no longer in the trade because you got stopped out. And that is what we call liquidity sweeps. Some call them stop hunts, liquidity grabs. And the whole idea is that um, institutions need liquidity when entering their positions because of the magnitude that they are trading at, the magnitude that they are wanting their positions to be filled in. And they don't just want to get in at random prices. They want good prices. They want the best price. And if they want to buy, they want that shit as low as possible. So um, in situations where the trend is up and buyers are getting in at support and there's strong confirmation, clean, valid candle, that at times is bait. A lot of times it's bait to get the retail traders in to build that liquidity. And where are all these guys going to put their stops? Behind the previous low, the previous market point. And you know what these guys do? They say, great. Um, I'm trying to fill this huge position, and I know there's liquidity sitting right below these lows because what is that liquidity? It's pending orders from buyers who are going to sell. So now institutions also want to buy. They want to buy. However, when they buy, they need someone who is selling. They need sellers. So they force price. So basically, they force sell. Um, they force the buyers to sell their positions by pushing prices to those liquidity zones, and then their order gets filled. Price kicks in, volume goes back in the direction of the prevailing trend, closes bullish, and then just takes off. Um, this happens often, time and time again. And you know, you can sit there and watch them happen. You can also set limits, and that's pretty much the basis of liquidity sweeps. So before entering a trade, back to this trade quality assessment, is we need to see some liquidity having being swept. We need to know that, okay, institutions actually tried to get their orders filled, and they did, and possibly took out some people, and now the volume is picking up. And that's it. That's when we're doing our thing. So we want to know if there's a liquidity sweep that's already happened. The next point, number 6, risk to reward. The setup needs to at least have 3R minimum, non-negotiable. If you trading 2R, 1R, what are we doing? What are we doing? I mean, you can take 1 hour profit. Don't get used to it. You can take 2 hour profit. But like to build that sustainable business, 3R plus, in the long term. And yeah, personally, 3R plus. Otherwise, what are we doing? What are we doing? And then number 7, entry pattern, clean, valid on the M30. And this is usually the bait. This is usually the bait to say, okay, there's a trap. Now, let's get ready for positions to get swept. Now, the next one is stop losses behind pattern wicks and and previous liquidity sweep zones, right? No news of volatility risk coming up. That's definitely on the checklist. You don't want to be getting into position if you know that the news is about to just be released. Rather wait it out. If you're in a position, okay, that's a different story. Maybe protect your risk, and let the market do the rest. And number 10, crucial. Am I focused? Am I calm? And would I take this setup 10 times out of 10 with no hesitation? And yeah, that's pretty much it. Then we're in our setup. 10 out of 10, A grade, that's what we want. If it's a B grade setup, we're cautious. It's this partial edge. We'll reduce size, we'll paper trade, or we'll just wait, man. And C grade, we don't entertain that. There's no edge for me, and I pass. I protect the capital. We live to fight another day. Okay, now back to our weekly analysis. Now that you guys have a brief idea of what it is that I'm trying to, you know, get at when I'm looking at these charts, as we can see here, um, the current trade that I'm in was a B grade setup, um, because of the moving averages. These moving averages, ideally, um, would have wanted them to be below price, but they're lagging, so we have to consider that. We could even simply remove them because right now we're just going to be focusing on raw market data. But we know once price closes above both these moving averages, then it's lit. It's lit. Okay, cool. On the H1, let's get more details into this gold market. On the H1, we can clearly see that, okay, cool. This range, that 38.2 level, showed a clear range from here to here. Price was just bouncing between these levels. Bounce, 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 bounce. And where I got creamed was here. Um, I got creamed. I was early and didn't factor the sweep here. So this was the second sweep, which is the one that I actually got on. Um, Entered this position over here. It was up about 2.4 R, so about 240 pips. And then pretty much range, waiting for FOMC, and stop was at break even, and it eventually came and took me out over here. So my reason for entry, definitely, it was the basis of this trap. I was like, okay, there is this trap. However, liquidity might come and get swept again. So I put my buy limit at the liquidity sweep zone or just under it. And at the time, that was below these wicks because I figured price will come and want to take these wicks. And that's exactly where I got filled. And yeah, that one was it was a 9, B grade, also because of the moving averages. But remember, I was being a little optimistic because we're at that 38.2 and we're anticipating that push and also wanting to get in my orders before the FOMC and pretty much managing the risk. So, okay, on the second position, I noticed, okay, we keep making lower lows, lower lows. However, down here we have this 618 fib level, which we're currently testing, and literally price came down, hit this level. I made sure my stop is behind the pain point. So if you zoom out on the H4, you'll see there's a, let's go there. Let's go there. On the H4, I made sure my stop is behind this wick here. Um, I didn't think there was a high probability of price being pushed all the way down there just to take out all those stops because it already took out all the stops that were behind this huge hammer type thing. Which huge hammer type thing? This one here. So my entry was literally here behind there because that's where all the buy stops would be, like the stop losses for people who bought around this area here. Their stops would be chilling here, and this is where my entry is. Price came in, swept that liquidity, and then we had this massive H4 engulfing pattern, well, engulfing candle. And this is what pretty much allowed me to put that second or third position to break even. And now we're locking and loading, waiting for the new week. So this trade is up $20 move, so 200 pips. I risked 100 pips on this. And what I want to see next is higher lows stopping to form. Because if we look here on the M30, we can see that higher lows have been consistent in this market. Consistent. Not higher lows, lower highs. My bad. Lower highs have been consistent on the M30. That's what's making this counter trend. And I have a counter trend line drawn at the top of these lower highs to pretty much capture the bearish volume that we are seeing right now. And that bearish volume is not over yet. We'll wait for price to confirm when it's over. But this is what I'm seeing right now. Lower highs still there, being maintained, and we had this push from Friday, and we creating this little higher low point on the M30. I just want to make sure. Okay. And pretty much what what would be ideal for my position, so stop is at break even, is a break beyond this trend line, counter trend line, and potentially a close above these higher lows, coming back to test a support level, and entry would be around here in the zone, maybe stop all the way down there, and pretty much ride it up, going all the way up, going all the way up, and trying to add positions along the way. So on the first trade that I'm in, that one is the projection is 1:13. So the projection is 3,485. And so far we're one is up to two, and we're trying to add, at least two more position, at least two more. Um, so on a 0.01, if we can get two more positions here, then we're looking at maybe about 6K in rands. Um, and yeah, this is pretty much the weekly breakdown. So what also could happen is we could see the market come back down here. Maybe find support here again at the 618 and then take off. Or pretty much continue its cycle of making lower lows and lower highs until it finds a strong enough level of support. However, this 618 level is a strong level of support. Uh, it's a it's a B grade setup. It's a you know, and in this case, this is where I would confirm that I am wrong in this case down here.